Sales were up 18% for Uber in the latest quarter. The rideshare company is also planning to buy back $20 billion US of stock. Let's go to Brad Erickson, equity analyst of internet at RBC Capital Markets. Brad, thanks for joining us today.
Thanks for having me. Good to see you.
Uber, I call it Uber for people and then Uber Eats separately. Which unit saw better growth in the latest quarter?
I think they're both growing. I think if you look at it purely on the numbers, I think delivery was just a skosh ahead, but they're both right in that kind of high teens category territory, 18 to 19%. And it's been incredible. They've both been able to sustain this growth for the last several years, and they keep neck and neck with one another.
Part of what they've been pushing is that loyalty program. How's it doing?
Yeah, no, it's been great. I think, in the 10 million or so users they added year over year, period over period, 6 million of those came on as loyalty users. So I think that continues to pay off. And, what they talked about on the call was that they see a lot of benefit from those users going from mobility to using the delivery function. They're trying to do a little bit better on getting the opposite. So getting those that only use the delivery piece to move over to mobility. But in general, it's a great, cross-pollination, cross-sell opportunity driven a lot of growth.
So they had, I guess, a week-long series of deals in an effort to promote the loyalty program and to get users to sign up for that. Was that sort of successful, and did that lead to some of the growth we've seen?
A week's not probably going to show up as visibly in the numbers, but sure, a little promotion never hurts. What we've found historically is when these types of promotions occur, and frequently if it's limited to, say, a week or two like this, you'll see kind of a temporary move in the numbers, and then things generally revert thereafter. So it's positive, but probably not visible.
Probably short term. All right. Is there a growth for rideshare? There are competitors now. We know, people have less money in their pockets this time because they're, worried about tariffs and the effect of tariffs. I'm wondering whether you see growth ahead for companies, Uber included, but also Lyft.
Yeah, absolutely. Start out with, this is a secularly growing market. People pay up for convenience. They pay a premium for it. And that's absolutely what this is. These companies, we always talk about it as it's giving time back to people. So you're kind of paying for more time in your life, which turns out a lot of people value very highly. So that, I think, is the underpinnings of growth. The second is there's still a lot of people who are just discovering these services. I know they're fairly well-known brands now, but we're still talking about in the US, maybe call it like a fifth of the country that might actually use these. And their frequency still has a lot to rise. There's still a ton of people who only use Uber once or twice a year, half their customer base. So we think, that boils down to secular growth. And then on top of which, Uber is always adding sort of new modalities. They talk about two-wheelers in other parts of the world. They talk about shared rides and maybe buses, things that replace public transport here in the US. All of those things roll up to contribute to really durable growth, we think.
Let me ask you about the consumer spending part of it, because people are trying to keep some of their money in their pockets, again, because we're worried about concerns or worried about tariffs and sort of how they're going to play out. We know things can change sort of almost by the hour with Washington. So has that hit them at all?
Not really. If you look at the numbers, two of the biggest kind of end market use cases they have are around travel, so airports in particular, and then commuting. And I think when you think about those two factors, particularly business travel, that is still catching up to COVID levels, those trends have actually held up quite firmly. Certainly, sure, they're trying to do their best to lower prices. They talked about, they control a lot of their insurance savings depending on how they control rides and do their underwriting. And so they are working to pass along some of those insurance savings to keep prices down. So it's not like they're being totally insensitive about price, but for whatever reason, we're continuing to see the consumer hold up in this category really well.
Okay, does it have room to maneuver? You mentioned insurance savings are one point for them, but if consumers decide they want to keep even more money in their pocket, do they have maneuverability?
They do to some degree, but yeah, I think one of the things Uber does really well is we call it merchandising, right? If you go into the Uber app, you order a ride, you're going to see a list of probably somewhere 5, 6, or 7 options, right? And if you're, week to week, month to month, feeling a little bit more budget constrained, you probably are willing to wait a little bit longer and save the extra $10 or whatever. So they offer a lot of great levels of rides you can go with, and I think that's one option that helps. Certainly, there's always going to be consumer sensitivity here, but again, we've always thought of this as more of a utility, a need to have in many cases, as opposed to a nice to have. And I think the numbers we're seeing kind of support that view.
I do want to get your take on robo taxis and the threat they pose to this business model. How is Uber addressing those threats?
Yeah, I would say very well. Few things there. One, we're still very early on. And so when you think about Waymo and Tesla and a few others that maybe want to go out and do it themselves, it obviously competes incrementally, but it's so small, it's not showing up in the numbers, probably won't show up for at least the next several years, if ever. Number two, Uber's moat, right? We always think about moats in technology. Uber's moat in this case is working with more suppliers, right? Fragmentation of supply. So as they add, they've added Waymo, they're working with, over a dozen other partners. As that number of partnerships continues to grow, the less likely it is that a single brand can break out and drive enough demand. Meaning, if GM wanted to fire something up next week, they're going to have to come to Uber because they're not going to be able to create their own brand to compete against Waymo and Tesla and all the others that aim to be out there. So we think they're really well positioned.